Welcome to another episode of 2 by 2. This is Praveen, and I have a question for all of my panelists today. Have you bought anything from Meesho? The answer can be no, it's okay.
Who wants to go first? Me? You're looking at me. Okay. No, I have not bought anything from Meesho.
Adarsh?
I personally haven't bought anything from Meesho, but I open the door to the Meesho delivery boy many times a day in the week because my domestic help buys a lot from Meesho.
Really?
Yes, she does.
What kind of products?
She buys everything. She buys apparel, she buys fashion accessories. I also think she bought a small earphone, like an audio accessory from Meesho. Like, we don't open her packages, obviously.
Yeah.
But yeah, she does a lot of shopping on Meesho.
Nice. Ganesh?
No. Unfortunately, I haven't ordered anything on Meesho.
Okay. But the reason we are asking that question is
You didn't
because
answer that question, PJK.
I have not bought anything from Meesho, although my house help told me about this very particular oven spray for cleaning the oven.
Wow.
Which I could not find on Flipkart. I could not find on Amazon. It was sold out. But for some reason, it was available on Meesho. And a friend's mom ordered it and got it for me and just passed it on. So, and I was like, where do you find this? Because it was not available on Amazon, on Flipkart, which from my perspective means it's not available anywhere. But then she was like, no, it was on Meesho. I was like, okay.
Sorry, you said Amazon and Flipkart. I really want to ask a counter question, right? When did you last shop on Flipkart?
I bought an air conditioner from Flipkart some time back. I still buy electronics from Flipkart.
Got it.
When I saw you first, I knew you were a nice guy.
Ganesh,
good
what
taste.
about you? When did you last buy something from Flipkart? Are you a Flipkart or an Amazon person?
No, so I'm primarily a one app kind of a user. So most of my e-commerce is on Amazon, most of my food is on Zomato, and likewise. So
Got it. And others, that leaves you.
I only shop on Flipkart. Flipkart is where the heart is. Flipkart is where the wallet is. Flipkart is where all the loyalty is.
By any chance, did you work at Flipkart?
How did you guess? How did you guess?
Sorry for
All
that diversion,
right.
PGK. Back to you.
All right. Today's episode is, you may have guessed, is not about Amazon, not about Flipkart, but it's about Meesho. Now, Meesho is a very interesting and somewhat counterintuitive company because Meesho came on it a few years back and it started off as a social commerce platform. It tried to sell on WhatsApp. It had these resellers. And I remember a lot of people looking at Meesho and thinking, this is fine, but how far will this go? And of course, they did a bunch of pivots later. And right now, as we are recording this, Meesho is on the precipice of going public. It has just filed its DRHP. And really what we are going to ask and try to answer in today's episode is, what are all the things that Meesho has done to get to where it is today? But that's a very small part of the discussion. The thrust of the discussion is going to be all of these strange, counterintuitive, and unusual things that Meesho has done. Where will it take it? And how far will it go, specifically over the next 2 to 3 years? We're going to try to put a crystal ball on Meesho and say, all of these things that they did, what's going to happen? Can they defend it? Can they aggressively expand it? Will other players come in and try to cut out and take some of this away? What's really going to happen? And to do that, I have two wonderful guests with me. My first guest is, you've heard him earlier, Adarsh. Adarsh Menon is a partner at Fireside Ventures. Adarsh is a very seasoned sales and marketing professional. He has around 23 years of experience across a ton of organizations. But the reason why Adarsh is here is because of two specific organizations that he really built, some of them 0 to 1, 1 to 10, 10 to 100. He spent 11 years at HUL. And that means that you understand retail, you understand how India or what's fashionable to say these days, Bharat, buys. And he spent 8 years at Flipkart. And at Flipkart, he did a range of roles, but his most recent one was heading ClearTrip and Recommerce. And for our listeners, Flipkart created Shopsy to reach value conscious customers, specifically in smaller towns and digital customers. And they also use resellers, social commerce, etc. So, Adarsh is here to give us perspective on the consumer, the market, and all of these other things. Welcome, Adarsh.
Thank you, PGK. Thank you.
And
Sorry, I must say this. I've given a lot of grief over the many past episodes about why do we have fireside chats in India and we're having a fireside chat because Adarsh is a venture capitalist from Fireside Ventures and we're chatting with him. Sorry, hashtag sorry, not sorry. Adarsh, back to you.
Looking
Adarsh,
forward to the fireside chat.
Fine. Adarsh, before I get in Ganesh, I'm just going to give you a chance. Just if you had to basically, like, in a few sentences, how do you see Meesho at this point?
Full respect, firstly, for what they've done, and honestly, on the precipice, like you said, of going public. But that's just a financial milestone in some way, right? I think it's a very, very good, fair, just reward of how brilliantly they've executed over certainly the last 5-6 years. So it's a good, just outcome. But it's a milestone. It's just one sort of fork in the road. There's a lot of upside and lots of stuff that I still think they have in store for India and for value conscious Indian customers.
Very interesting. Okay, we'll jump into some of those. But let me introduce my second guest. My second guest is Ganesh Nagarsekar, who's the founder of GSN Invest. And he's a SEBI registered research analyst and used to be an investment analyst at Goldman Sachs. Now, the reason why I wanted Ganesh in this discussion was because he actually wrote a very great analysis of Meesho's DRHP that they had filed with SEBI. And in that analysis, it's a pretty long read, he had described Meesho as a logistics giant masquerading as an e-commerce platform. It's a kind of headline that I wish at the Ken we had come up with. So, welcome, Ganesh.
Yeah. So great to be a part of this session. So as you said, right, I think the direction in which Meesho is heading, I think a lot of their incremental focus is on the logistics side of things. Because if you look at some of the key metrics that we kind of discussed in the session as well, in terms of how they're kind of scaling up orders and how they're kind of focusing on even kind of lower AOP orders to kind of scale up volumes. I think that is one trade-off which was very, very evident going through the RHP as well. And as they are kind of scaling up Valmo, which is their kind of logistics arm, I think incrementally the direction is having greater control of order volumes in the country and then kind of scaling up, which can kind of give them leverage to scale up the logistics part of the business, which is Valmo as such. So that was the kind of perspective that I was coming in while looking at Meesho as such.
Okay, we'll go into some of those as well.
So Ganesh is saying Meesho is a logistics company masquerading as an e-commerce company. I think Meesho is a data science company masquerading as an e-commerce company.
Explain.
Because the amount of the way their ecosystem works and the way their flywheel works just works on collecting so much data at a customer level, how customers behave, how they shop, what they buy, what they don't buy, what price points, so on and so forth. And the way they're able to use their data to personalize everything, starting with how sellers put up selection, right down to their shopping feed. I think their shopping feed is phenomenal, right? And how personalized and customized it is at a user level. That can't happen till you have some really good data science working for you.
I understand. I mean, I would just like mildly push back and say that isn't that true for any e-commerce company?
Everyone does it certainly everyone does it in at some level or the other. I do think Meesho is gold standard on that.
Really?
On how they use their data to make sure their shopping experience and everything in the funnel is the most personalized. And if you think of the Meesho consumer, I'm sure some stage next hour and a half we'll talk about it. The Meesho consumer does value community, does value trust, and certainly values personalization. Right? There are regional nuances, there are local nuances. Affordability challenges are different across different customers. So the more you personalize, obviously the sharper you shoot. And I think this part of Meesho, I think, is fairly unappreciated. The fact that they have a kick-ass data sciences engine and team that works to keep making their business better and better and better.
Interesting. Okay.
What's a good metric or what's a good method to assess the efficiency of a data sciences team within a large e-commerce retailer?
So if you look at different parts of how an e-commerce company works, and I think the most common part or something that gets, I think in all companies gets tracked the most, it is actually engagement of the user and final conversion of the user. So if a user comes in and drops out immediately, obviously it shows that the user has not found that experience engaging enough or sticky enough, right up to how conversion happens. So simple units sold by user sessions is a very good metric of how well you've personalized. Right now, personalization at that scale, you're talking couple of hundred million users, can only happen when there is that data science engine working. So I think all metrics of an e-commerce company, especially the shopping metrics, you can actually hold it to a test of saying, is your data science working well enough or not?
I'm just going to
Interesting.
bring in Ganesh because Ganesh, in your analysis of the DRHP, is there something around the sessions and purchases? I think you had put something. That's what I was asking.
Yeah, yeah. So we have that as well. And but coming to Adarsh's point, I think the data science point is quite valid. And they've kind of quantified this in the DRSP as well, which is the amount of purchases that happen through their recommendations or the Meesho feed as a percentage of the total order purchases. And that number is closer to 74.5% orders, so, right? So almost three-fourths of the total orders are via feed or via recommendations.
There you
So
go.
that point is extremely true that the broader data center part of it is the data collection part of it, and the data processing part of it is quite efficient, and that's been a good driver of their volumes as well.
So if you look at how the shopping funnel is, like on the homepage, most obviously everybody has recommendations to your point, right?
Correct.
It'll be a bar or two, right? Meesho actually, and this is not now, clearly 3-4 years back, 5 years back, has what's called an endless shopping feed, right? So if you go into their homepage, this is the first page that opens up when you fire the app. Below all the merchandise, paid stuff and all of that, what there's an endless shopping feed, which is category agnostic and customer personalized, user personalized, right? So it is an endless feed. So you can keep scrolling. So it is also in tune with
So in
the.
some sense, it's like a Facebook feed.
It is exactly like a Facebook feed with products, and each product is across different categories, right? And it's to the behavior, the Facebook, Instagram behavior of scrolling. So you can keep scrolling endlessly and just keep seeing products and products and products and products. Now, obviously, imagine if your data that goes into it is not correct, right? People will just lapse and sort of,
This is great because Facebook is phenomenally good at data science
Yes.
and at personalization. Why? Because Facebook's primary business model is selling ads.
Correct.
And the better it can show you and predict what it should show you next, the better it can show you ads that work, which incidentally is Meesho's business model as well, right? So if you kind of think about it, I mean, this is the first time I'm seeing Meesho's feed and Facebook's feed. In some senses, yeah, I mean, they're both doing the same thing.
Same thing. Yeah. It is about personalizing, yes. Except in this case, it's commerce.
It's commerce.
It's commerce.
But Meesho doesn't make its money through fees on the product that it's selling, right?
Zero.
That's where it comes in from, right? Like Facebook. I mean, Meesho is like, I'll show you ads, and I take zero commissions on the products. But if I'm going to be better at showing you ads, only then can I get better at collecting money for ads from merchants, right? So it sort of makes sense.
Just a small trivia. The current CPO of Meesho, Prasanna Arunachalam, used to be one of the product heads at Vizuri, which is an ad network.
Ad network. Oh, I remember that from.
So there is some connections there as well.
Sorry, just digressed a
No,
bit.
we love
Sorry,
digressions.
not digress.
Digressions are exactly what this podcast is about. I think the question that I would ask both of you is that, suppose, for instance, I asked you to, like you've already said one thing, Adarsh, which is that actually the data is this really big moat, differentiator, etc. But suppose I asked all of you, in fact, even Rohin, like, how would you describe Meesho's, shall we say, fundamental differentiators? Let's call it that for now, which has helped it get to where it is today. If you had to list out 3-4 things, and what we'll do over this podcast is we'll try to go into each one of them and try to project those into the future. We'll touch a little bit upon how it got that, and then we'll try to push that and say, okay, can it like continue and go beyond that? And that's broadly what the structure of today's episode is going to be. So if I had to ask, what would it be? What are the things that give it its unique advantages, position, etc. Others, I'm pretty sure you have all 5 or 6 listed out very clearly, but yes, let's go.
You go first?
No. The experts go first.
So the number one thing that kind of stands out, right, is if you look at the kind of breakup of the NFP growth over the last 2 years, that has been kind of primarily been driven by the order growth versus the value growth, right?
Sorry, explain that. What is an NMV?
So NMV is the total, so the total marketplace sales that are kind of happening on the platform,
Okay.
less the discounts, less the offers that are kind of
Can we
given,
call it
right?
net merchandise value, because there is the gross merchandise value? So this is so basically it is the sum total of all the value of all the items sold minus all the costs.
Right,
Not cost really,
exactly.
but minus some of the discounts. Okay, fair enough.
Minus the discounts and stuff like that, right? So that has kind of grown at 25% over the last reported periods, right? From 23 to 25. But if you look at the order growth in the same period has been almost 38%, right? So a substantially larger order growth. And obviously that means that the average order value has kind of come down. So the average order value has kind of come down 10% every year. So it used to be, I think, say 280 in 23, that went to 249 in 24, and now 230 in 25, right? So one kind of conscious decision that they appear to be taking is focusing on kind of increasing the kind of order volumes that they have, and even they're kind of even comfortable taking a hit on uh, the average order value to kind of get to that goal, right? Uh, the impact that we're seeing of that, right, is uh, if you're looking at the amount that the sellers are able to sell on the platform, that's kind of gone up materially, right? So, say in the cohort, if you can look at the cohort from say 22 to 24, the cohort in 22 who had joined, it took them say 3 years to triple their revenue. The same if you look at the cohorts in 23 or 24, they are now tripling their revenue in just a year or so, right? So, the sellers on the platform are kind of growing extremely fast. And that makes Meesho one a very attractive platform for the seller, right? Because you're able to get on the platform and scale up very fast. The second point of this is because they are kind of able to increase their volumes at such a fast pace, they're able to negotiate with their logistics partners better and get their cost per delivery down as well, right? So if you look at the cost per delivery, that's the trajectory of the cost per delivery. That's gone down from almost 66 to 52, right? In just a 3 year period. So FY23, that used to be at 66. Today, that's at 52, right? So a very, very sharp improvement there. And I think that gives them a very, very strong moat while competing, right? Because effectively you are competing in low order value kind of a segment. So the average order value would be say 200 orders. So, and in that segment, if you're able to bring down the delivery cost by even 10 rupees, that's a very major advantage to the sellers on the platform, right?
Interesting. So what you're saying is the one fundamental thing that they have is they are able to get this seller lock-in, which is through this vicious, virtuous cycle of where you're basically going to like bring down costs, but as a result you're increasing value, so you're able to like keep scaling up. So your seller lock-in
Right.
is going to be really hard to break. We'll come to what happens in the future, but that's one. I'll go. Okay, I think there are fundamentally 3 things that make Meesho's strategically very, very important and how it got to where it is today. The first is zero commission. Now, zero commission is something that was like, when it came up with zero commission, I felt that at that point in time, it was like fairly early in the game. And a lot of people looked at it and said, okay, you're just really going to burn a lot of money. It seems like just an approach to get some market and this is not going to sustain itself. And they were wrong because they continued. And in fact, forget about e-commerce for a second. If you look at even say, I think Meesho is one of the first companies that realized that this was the path to disruption of existing players. So if you look at say what Namayatri and Rapido are doing with say Ola and Uber, again a zero commission approach. If you look at what Rapido is trying in food delivery to hit Zomato and Swiggy, I think they're also trying a zero commission. So the zero commission, I think it's fair to say that Meesho is one of the first set of firms that tried this out. So for me, that's one. I'll come to the others, but for me, seems like a very big thing. Adarsh, go for it.
The question is what stands out about Meesho, right?
Yes.
That's a question. So I think Ganesh gave a very good zoomed in view. If I just give a zoomed out view, right?
Yes.
So the market that Meesho is talking to, right? That market in India, give or take, is anywhere between 200 to 300, 350 million households. But they are not on e-commerce, right? So just at the highest level, the market is huge. And even today, the market is underpenetrated. right? So there is that much of headroom further. So first of all, they're playing in a huge space and they have solid PMF. I think that's the first big thing about Meesho. The second thing is, see, they've managed to, ultimately it's an e-commerce business, right? Right? दुकान है, right? Electronic दुकान है. Now कोई भी दुकानदार अगर दुकान चलाता है, what do you need? You need customers and you need customers loyalty, right? Which means you need customers to come back to you as many times as possible and buy as many things from you as possible. If you have this, then you are sort of in a good place, right? The fact that Meesho has been able to get customer loyalty, I think, is a very big thing, which means customers at that scale, several hundred millions, are able to come back to the platform several times a month, may not buy every month, maybe buying every second month, maybe buying every 1.5 months, right? I think 8 or 9 is their transactions per customer per year, which I think is a very, very strong metric. So they've been able to get customer loyalty. And ultimately for a retailer, e-tailer, kirana store, whatever it is, if you have customers and if you have customer loyalty, there you go. You pretty much don't need anything. Because of that, what they've been able to do is also get loyalty at the seller level, right? So there's a fair high degree of, I would say, captive supply that comes in.
Yeah, which is
right?
what Ganesh touched on.
Which is what Ganesh spoke about, right? I think what happens at that scale, when you're talking couple of 100 million your customers, when you're talking several lakhs of sellers, there is a virality and a network effect that kicks in, which means your incremental acquisition cost of getting customers or of getting sellers is virtually nothing, right? So then the ball starts rolling and then the flywheel starts rolling. So that, I think, is what for me works, is what is working for Meesho. And to be fair, I don't think they were there for maybe the first 5 years of their existence.
I think
Right?
that's fair.
It's all of this is work that maybe started happening in this direction just pre-COVID or just after COVID, and from there it's certainly been they've been on this trajectory with obviously some bumps along the way, but the trajectory now is fairly sort of sorted.
Rohin?
I'm going to cop out and give a soft answer. And I have a bias for that, and I'll explain my bias as well. I feel like Meesho's culture is its differentiator. So all of these things Meesho has gone through some incredible pivots. Meesho started out as Fashioneer, which was trying to sell fashion at a hyper-local level. From that, it pivoted to the reseller model.
Yes.
Sorry, the WhatsApp model.
Yeah, they had
right?
WhatsApp there.
From that, it pivoted to the reseller model. And from that, it pivoted to its current model. And I think at the heart of all these pivots has been this sort of constant, relentless paranoia and willingness to be and desire to be close to the ground and listen to what consumers and businesses are trying to tell them. So all of these things that Adarsh also spoke about, right? Like, that, and even Ganesh spoke about that, drive more and more number of orders or drive more loyalty, or that if you get suppliers, then the customers will come. And then I think all of that has been fundamentally for Meesho born of this, I think obsessive desire to be close to the customer. And and the bias for me where I say this is because I had interviewed Meesho's founder, Vidit Atre, for the First Principles podcast earlier this year. And
By the way, I must interrupt you and say for our listeners that First Principles was voted as Apple's top podcast for this year. We just found out today morning.
That is not an ad.
That is not an ad, but I'm just saying that it was voted. It was basically today, and the first episode of 2025 First Principles was the interview with Vidit Atre. Yeah.
So I do feel that culture increasingly has not been talked about as much. It used to be, right? I mean, in the earlier wave of tech internet in India, we used to talk a lot about company cultures and stuff like that. And then came the hyperscaling part and blitzscaling, and everyone is doing everything, and everyone is doing loans, and everyone is competing with each other. And we sort of forgot about culture and what the differentiator it can be. I feel it's important. I think just think about it. The number of companies that have gone public in the last 12 months or in the next 12 months, and how many of them really like. The last one I can actually think of is probably Ather Energy.
Yeah.
Where there's a strong cultural aspect. So my sense is what got Meesho here is its culture, right? Because many of these pivots is like, it did when it was not, it didn't have its back to the wall, where it wasn't that, we have 2 months of salary left. If we don't pivot, guys, we are dead. It did those pivots when things seem to be going quite well for itself, which is actually very rare.
Yeah.
Right? And it did it multiple times. So when you look forward into the future over the next, let's say, 12 months, 24 months, 36 months, I feel that it's, and I'm sure Vidit and all of Meesho knows it as well, that they'll have to work really hard to preserve that culture, because there is that, you cross that Rubicon and you become a public company, and then you feel, whether or not you acknowledge it or not, you've arrived.
Yeah.
And you're safe.
Yeah.
And I think that for me is both its differentiator as well as the thing that, if they let go, could become a risk as well.
And we've heard stories of this. Like, for instance, as an example, this has been said fairly publicly that if you look at, say, Zomato after it went public, I think Dipinder Goyal has been fairly candid that after it went public, there was a lot of there was a certain amount of complacency that set into the company, and they had to do really drastic things to get the hunger and the drive back, etc. So I'm sure some of these things are considerations that companies will do. Okay, I'm just going to summarize very broadly where we are at. I think when we talked about differentiators, Ganesh said, look, seller lock-in, very important thing. Meesho seems to have figured it out, and he gave some fantastic numbers to back that. Others' point was two things. You spoke about geographical focus. You're saying that, look, these are the kind of customers that they're going after. This is definitely something that's really different. And of course, the second thing that you spoke
Loyalty.
about, the quality.
Loyalty.
Sorry, second thing that you spoke about was loyalty. You said that seller loyalty, which comes back to Ganesh's point, that once you lock in sellers
loyalty,
and customers
And customer loyalty.
and customer loyalty, then it becomes very hard to dislodge. Of course, I spoke about zero commission and Rowan spoke about culture. I think the fun part is none of us have said the most or one of the more interesting things about Meesho, which is Valmo and what they're doing with logistics, which in my mind is probably the most interesting thing, but we'll come to that. So very broadly, what we'll do is over the next few minutes, we'll just go into each one of these one by one, and we'll see if you have to push this forward, where does it go? I guess we can start with the geographic focus, which is the customers itself. So you said 250 to 400 million, Adarsh?
Yeah, so how we segment India, right? So there is India 1, India 2, so on and so forth, right?
Sure.
So if you just look at middle class India, right? Middle class India could be anybody earning in the range of 5 lakhs per annum.
Okay.
Right? So that is proper middle class, 5 lakhs, 6 lakhs, 10 lakhs per annum, and below that, right? So that in India, we think is close to 250 million, actually close to 300 million households, 275 million households. Right now, that's a very, very big number. 275 million into average of 4 per household, you're talking 600-700 million people, right? So in terms of number of people, that's a very big number. Now, obviously, not everybody is on the internet. People on the internet are not e-commerce shoppers, right? There is a fair degree of sort of head and tail within that as well. But Meesho does today talk to the top of that middle class layer, right? Top and middle of that, which is about 200 million odd customers, right? But there is still another 400-500 million there to be, to be catered to. Big question mark, especially as the company goes public and, thinks there is more scrutiny, there is more compliance and so on. Now the financial model to service that as customers start getting more penny pins, live further away, their AOVs become smaller, obviously the business model starts creaking.
Correct.
Right? So I think there is more work needed to get to the next level of this base, but this 200-250 million, I think, is fairly squarely in the bag.
Yeah. Sorry, Ganesh, I have a quick question. From the DRHP, I'm sure it was mentioned how many transacting customers do they have. Do you have the number or do you know? Can you tell us anything, whatever is there?
Yeah. So as of Q1, they have 21 crore transacting customers. And on average, they kind of have 8 ships out of the year. So quite a large and quite active base.
That's the point of scale and loyalty, right? So that 21 crores is 210 million, right? So it is in that range. So that's big, right? Now what's happening with this customer base? And in fact, we did a consumer report looking forward 2025, 2030, what it looks like.
I read it.
So this consumer is not a, passive recipient of goods. You can't just thrust whatever you want to this consumer. This consumer is very aspirational. Certainly there are affordability, sort of constraints, but very aspirational, regional nuances. So wants what is personalized, wants everyday shopping, and the most important thing is highly digitally savvy. Highly digitally savvy. Fun fact: the middle class Indian consumer at a person individual level consumes almost 2x of mobile phone data as compared to the average American.
Sure.
Right?
I can imagine
It's
that.
this is middle class India. This is not upper India.
Sure.
Right? So they are on their phone. They spend 2.5, 3 hours every day on feeds. Very digitally savvy, high degree of aspiration. Access has not caught up. Right? Another fun fact: only 1 in 10 Indians live in a pin code where there are more than 5 organized retail stores. And so the reality is these people are consuming a lot of content, very high on aspiration, but they don't have access. Right? I think that is what Meesho and Flipkart.
So it's the outlet.
etc.
Like there is the ambition and the desire, but no outlet.
But there's no outlet to purchase, right? They are.
I understand, Adarsh. I think I'm just going to ask a question, and this is genuinely a question that I'm asking, which is that I always worked with the assumption, and in fact, I mean, to be very fair, I stuck my neck out and wrote about this a few years back, maybe around 5 years back, where I spoke about the pyramid of Indian shoppers, right? Yes. And I was basically making this argument that the market is actually much shallower than people think it is. Because people essentially go and say, oh, look, there is 1 billion people, there is this Middle India, there is this Bharat and all of this, which I get. And my argument was that, you know what? I think that the outer limit of transacting customers that, say, a Flipkart, not even an Amazon, I would say Flipkart. Flipkart has probably been at the frontier at that point in time.
Yes.
Was somewhere around 100, 120 transacting customers. Again, this is like 4-5 years back.
Million, you mean?
120 million.
Yeah.
Okay. No.
Flipkart
4-5 years back was close to 200 million transacting customers.
Right.
400 million users, which means people who come but don't transact.
Correct.
Right? As in they come. These are not internet non-e-commerce. These are people who come to e-com.
Got it.
They don't buy. But 200 million buy. Like this is a 4-5-year-old.
Fair point. Okay.
Point,
So
yeah.
whether it was 150, 200, I'm saying that my point was that at that point I said that any company that wants to go beyond this 200 million, it like the analogy that I did was it's like going out into the desert. Like you can acquire customers beyond that, but it is just going to come at such an immense cost and you're going to try really hard and that it's probably not worth it. So which is why a large section of efforts are being made to get existing customers to transact more, to cross-sell, to increase their basket size, etc.
Yes.
Somehow, this is contrary to that.
Yes.
What changed? Like, what happened really?
Yeah. So I don't think there was ever any doubt that the market had depth. I don't think that's a doubt at all.
Really?
Yeah. I don't think that was in doubt.
Okay.
What though was in doubt, let's say 7-8 years back, 6-7 years back, was beyond that 200 millionth customer, right? The 600 million that should be part of that shopping. How do you reach them? What is the business model to reach them, right? What kind of selection do you get? What kind of supply chain do you build? What is your service proposition? What is your pricing proposition? How do you talk to them and bring them to, get them to download the app? I think that was the...
So it was never a question of them not being able to afford it or being able to pay for it. Of course, we understand that income levels change at those levels, but still.
Never a question. Because ultimately, those households have always been there. They've always been earning like this. They have a consumption basket, right? Even before Meesho, before Flipkart, it's not that Indian, like the lower Bharat household in India wasn't buying stuff. They were buying stuff, right? They were buying offline. They were buying unbranded, right? They were buying whatever the Kirana store would give them. What's happened is the business model to reach those customers has now gotten a lot better, a lot sharper. Clearly, the mobile phone in everyone's hands has helped. Clearly, data being, cheap and very free and very cheap has helped. And this business model where the right selection is made available to them, followed by consumer level, traction that has happened on unbranded to branded, wanting to buy things which are, which work for me, wanting to look good, wanting to be healthier, wanting to eat healthier food. I think few of these things have come together. So the demand has certainly become better, but credit is to the business model that's been put in place.
Got it.
Right? And zero commission, and you alluded to it. I think that was a master stroke. Because
it's a little counterintuitive though, because when you think of, okay, you're a big company and you want to go further down the pyramid where it's going to become more and more precarious and loss making.
Yes.
So you'd be tempted to say you know what, I'll cut my margins a bit, but I'll still, like, maybe I'll hope to sell at, like, very minimal profit margins, right? But this is almost sort of the other way around, right? You're saying, as I head out, I mean, to use PGK's
desert,
analogy,
yeah.
into the desert,
Yeah.
I'm going to have like a no water bottle policy,
Exactly. I'm
right?
gonna have
Like,
fewer
so
things
it's,
on me.
yeah,
Okay.
so it's, in some senses, it's embracing scarcity, and then designing or like, constraints, and then designing a business model around it. Like, you think these customers are not that valuable, let's make it even harder by doing
Correct.
away with commissions, and let's design a business model around it. Did it work? Does it work like that? I mean, I can see a sort of counterintuitive sense in that, right? If you can strip away everything, and I hate to use the word, but is this like the ultimate jugaad way of, like, building a business?
So here, of course, we're all wiser in hindsight, right? And
Right.
it's
Yeah,
it's obviously the decision is paid off well, so it's easy to look at all the positives. But here's what I think had happened, and obviously, we were tracking it very closely. I was of
When
the
you were at
firm
Flipkart,
belief
yeah.
that
Because
it's a red
you're
ocean.
no longer at Flipkart, you don't have to comment on this.
Yeah.
But now it's known that this surely has to be one of the biggest strategic mistakes for Flipkart, which is the emergence of Meesho, and Meesho taking away what should have been, I want to say by birthright, but let's forget that, right? By right, Flipkart's market to own, right? Like, again, I don't want you to kind of comment on it because it would be unfair, right? Yeah, but please go ahead. Like, I mean, when you were at Flipkart, I'm sure you must have seen Meesho and, like,
Yeah, so like when zero commission happened, I was thinking exactly like you, saying this is you're diving deeper into the red ocean, and obviously you'll come out with nothing, right? But here is what has happened because of that. So at the highest level, the demand was never in question,
Okay.
right? You're talking to a lot of people. You're talking to 100, 200, 300, 400, pick a number, right? That those many people. You're also talking categories that are purchased very frequently, right?
Like?
You're talking apparel,
Got it.
beauty, food, accessories. So these are frequently purchased. It's not a mobile phone. It's not an AC.
got
it's not
it.
a TV,
And at
right?
price points which are obviously they have to be affordable
price
at that.
points. So you're talking to a large number of people.
So just for context, it's like what, a couple of ₹100 price points.
I think in fashion, ASP would be close to 300. Beauty would be closer to 100.
Yeah.
So on an average, you're talking 250, 300.
Yeah, which
give or take.
squares
Which is
with
what
Ganesh
Ganesh was
said,
saying.
right?
Ganesh was saying, what did
230.
you mention was the average order value,
230.
Ganesh? 230 is what you said.
Yeah.
So the average is 230.
230.
And apparel is 300,
300.
beauty is 160, footwear is 178.
There you
Oh,
go. Right. So
okay.
in that range, home would be even sub $100, right?
Correct.
So when you're talking large number of people, large, frequently purchased categories, then it's a very good idea to strategically design your business model around transactions. Because what happens when you have zero commission? What happened? The first thing is, like, lakhs of sellers latched on.
Correct.
Because zero commission, so low cost of doing business.
Correct.
When lakhs of sellers latch onto a marketplace, what happens is they
Visibility.
compete with each other to bring price down. If three of us are in the marketplace selling a t-shirt and you list it at 400, the first thing you'll do is you'll list it at 350. I will then list it at 300, right? So sellers compete with each other to bring price down. Then what happens is customers are very happy because, wow, there's a platform that has low prices. That gets the flywheel rolling. That gives you a lot of customer data, which then is used to make your entire business go better. That gives you a platform to monetize with advertising, with logistics. When that happens, your sellers become even more loyal because your business, it's a great platform. Customers are here. That's the flywheel that keeps rolling.
I remember talking to a founder CEO of, let's say, a e-commerce, quick commerce company, just around the time when this was happening, when Meesho was just starting to like scale up. I think it was just post-COVID. I remember him telling me that I opened Meesho and I see that there is a kurta for like 120, 130 rupees. He's like, how do you even get a kurta for 100? Who makes this? How is this even possible? So of course he was of the opinion that this is not going to be sustainable. But I understand now from your perspective that what's going on
Right.
here.
Yeah. Think of a mall. If you go shopping to a mall and there are 5 unbranded, shoe shops, they will compete with each other to bring price down. The mall doesn't have to do anything.
Sorry, Adarsh, I want to, Ganesh, we'll come to you, but I just want to complete this point with Adarsh. Adarsh, can you help contrast this? Because this point that you're making, this is true of even any other platform, like an Amazon or Flipkart as well. For example, if there's a particular product which is selling, and there are, let's say, 10 sellers on Amazon, they will also compete against each other to reduce prices. The only difference between, let's say, the Amazon/Flipkart model and the Meesho model is now these sellers have the potential to discount it even more because they don't have to pay the commission to the platform. So fundamentally there is the competition is not the differentiator. You're saying how deep the true price discovery is the differentiator, because now they can go all the way down to where they feel, and that really takes it to affordable levels.
Yes, the density of sellers is the differentiator. If you have
Why is the density higher?
if you have 10 sellers versus 100 sellers, your price on a platform.
No, I buy the fact that the more dense the competition, the faster the price discovery. But I'm saying,
reduction, yes.
right? So, but why is it more dense on Meesho versus Flipkart?
I think that's what zero commission achieved. Because zero commission.
Okay, it brings in the okay.
Because zero commission reduced the cost of doing business for a seller.
Got it.
Sellers obviously flocked to the marketplace. More and more sellers flocked to the marketplace. That led to pricing being low. That led to consumers obviously, showering love to the marketplace because it's a low price platform.
It's a very interesting and complex, well orchestrated system from what you're saying, right? You had to sequence this in just the right way because you couldn't have got this wrong. You couldn't have optimized for, let's say, customers first, or you couldn't have not brought in, right? So you had to kind of throw open the gates by saying zero commission, which brings in large this thing, and then you allow them to cut prices, and then interesting. And then final sequence of that is you use data sciences to make the entire flywheel even better.
Because your platform has so many more transactions, which you can do only because you're talking to 200-400 million people on frequently shopped categories.
Got it.
So it's many things that need to come into place.
In a parallel universe, you couldn't have solved this problem by, let's say, another Meesho saying or another Vidit saying, hey guys, I figured out how to solve this. Let's build a great data science team and let's build a great recommendation engine and feed. Correct. Because that one would fail because it was not generating the amount of transactions for it to work.
Sessions,
so you had to sequence this one after the other, 1, 2, 3, 4, 5. And at the final stage, the optimization stage is the data science stage, which ultimately flows back and makes the entire flywheel better with each revolution.
Practically with every session, Now, obviously, now this is the theory of it, and I think the theory has worked wonderfully.
And like you said,
right?
we're all understanding this in hindsight.
Yeah, we're all.
And for all you know, no matter what Vidit says, I'm sure there are parts of it which even Vidit and Meesho discovered it on the fly. But that's fine, right?
Yeah,
credit to them.
Yeah, this is conviction saying this is how I will build the marketplace.
Correct.
Now, obviously, what they also did, and there was a fair amount of cost involved with that, as the sellers and the supply started ramping up, there was obviously organically demand ramping up because, hey, here's a platform that is, so affordable.
Yeah, word of mouth gets around that this is the cheapest, best place.
They also did a lot of very, very heavy customer acquisition at that time. Right? So it's a shake hand of saying, here is supply ramping up. The guys are fighting amongst each other to reduce prices.
Correct.
Now let me go and spend a lot on getting customers to download the app, because now when they come to the app, they'll see great supply. Now,
Great. And if you didn't do that at that point in time, then you have the situation where a lot of sellers have come and all the sellers are like, where are the buyers?
Where dhanda ka hai, right? They'll lose interest. So
Ganesh, do you have anything to add on the demand side, which is what others touched upon? Like, where does Meesho spend money? Do you have a sense of how much do they spend money to acquire customers?
So that number isn't kind of stated publicly as such. I think, but I have a slightly contradictory point on this.
Go for it.
Is that in terms of, you look at the kind of seller growth that they have, right? That hasn't been like extremely strong. It's still been at say 6-7% odd or so. But a bulk of their growth hasn't come from more sellers coming to the platform. It's come primarily from their existing sellers kind of selling more on the platform, right? So I think that's one area where I kind of slightly differ. And another kind of key insight here is that if you look at the kind of sellers that they have on the platform, right, these are not, so obviously there'll be some amount of them which will be kind of resellers, etc. But I think one very good seller kind of cohort that these guys have tapped into is effectively small manufacturers, right, who are kind of manufacturing their own kind of material and then selling directly on Meesho. And that allows them to kind of sell at a much lower price and while still kind of maintaining a margin, right? Because effectively the middleman kind of goes away from the equation. So I think that is one part that they've kind of cracked quite well. And on the seller front, I think a bulk of the growth has been from existing sellers kind of selling more versus kind of new sellers coming on the platform as
Got
such.
it. Can you just touch upon that for 2 minutes? That manufacturer selling directly as opposed to going through middleman. Wouldn't that be normal? No.
No, it depends on scale.
Okay.
Because if you have very low scale, you can't do business with a manufacturer directly, right? Because the middleman breaks bulk. So I think as scale builds up, you cut the middleman, you go straight to up the value chain to the manufacturer, and obviously you are able to get much lower prices because you've eliminated the middleman.
Got it.
So I think what happens again, this is the other benefit with scale, right? That with scale you start going higher up in the value chain, and then you cut it. So here's the point, right? I think the point of view that Meesho took back then before this was a very strategic call saying we will scale, and then we will monetize, right? So I think it's important to note that they very consciously, when they did the zero commission, they said for the medium term, short term, we will compromise profits, we will compromise margins.
And I remember that was the period when everyone was sort of bearish on Meesho, saying that how does
That
this
is when there
work?
were like media articles and saying that
That's right.
these guys can't be sustainable
Because the
anymore,
books were bad, right?
They were.
Books
They
were
weren't
bad,
looking good.
right? The
That
margins
takes
were not
conviction.
coming. That takes and to stick with it. I think obviously if it works, then you stick with it. But when it's not working, to tide over those days, those months, where you're burning through money and you're saying the only or the biggest source of revenue for a marketplace is commission.
Correct.
You're saying I won't do that.
Correct.
So obviously you are taking a big hit on your near-term margins. But the conviction to say this is the way transactions, data, scale, etc. will build up. It's
Got it.
worked
Now,
out well.
question for you, especially Adarsh, and of course Ganesh, which is we spoke about the customers, right? Let's go back to the customers. That 250. What is the next frontier? At what point does this model, in its current form, we're not talking about future, in its current form, starts to become a little shaky? We don't know. We are all
Sorry,
just guessing.
Can I reframe that as dimensions?
Sure.
Like in the sense that if you look at Meesho today, right? The
210 million.
dimensions, exactly. So let's say it's 250 to 300 million household is one dimension.
Sure.
So you can go deeper on that, dimension. Second is its top categories, right? It sells fashion, home accessories, low value items. It does not consciously sell things like smartphones, etc.
Yeah. In fact, it tried to go slightly premium at one point,
Right.
and then
Right.
then it came back
it
down.
doesn't. Right. So dimension one is size of the market that you're going. Dimension two is the sort of products that you sell. What are the other dimension three is the business model or like where you make your money from.
Sure.
So right now they make it from ad services. Dimension four is like Adarsh said, when you go up the chain, suddenly you begin to realize that, oh, there is this logistics layer which I can do something with, right?
Correct.
So I would love to hear which of these dimensions or perhaps another dimension that we don't even know of which will emerge, right? Because then that will help us steer the discussion onto, slightly more concrete possibilities. Otherwise, there's a real risk that we'll be all trying to, that famous analogy of the blind man and the elephant, right? We'll all be saying, yeah, the market is much bigger and they can kind of. So which dimension would, let's start with you, Ganesh, right? If you're looking at, let's say, the next 3 years or 2 years or 3 years, and you're trying to predict the top two dimensions where you feel Meesho is going to double down on, what dimensions might those be?
Anshit. So I think number one obviously will be Valmo, right? Which is the logistic farm that they have. And I think a consequence of wanting to grow Valmo will be kind of branching into newer product category, right? So as a kind of extension of the point that you had spoken about.
Sorry,
uh,
before you go deeper, help us explain why you said that, because I think there's a lot of meaning in what you said, which I think is because you've studied it, you know it well, but that's not so obvious. You said number one is Valmo. Valmo is their logistics business, again, on which they make no money directly, right? They run it as a second. You said because they go deeper into that dimension, it will change the sort of products that they sell, which actually is an even more advanced feature. So help us understand, what do you mean? Why did you say number one is Valmo, and what Valmo does to its product mix?
Understood. Got it. So I'll just kind of give a brief background of what Valmo is first, and then kind of
Yes,
dive into this.
please do that.
So broadly, if you look at the Indian logistics landscape, right, that's kind of extremely fragmented. So you've got these last mile delivery boys, etc. You've got small local warehouses, etc. in the middle mile, and then you've got the trucking companies for your first mile, mid mile, etc. Right, and effectively, when you're kind of dealing with them, because these are very fragmented kind of players, if you kind of figure out a way in which these players compete with each other to kind of give you the best potential rate, you are able to kind of optimize that complete market, right? So via Valmo, what they're trying to do is instead of kind of having kind of outsourcing their materials to a single third party kind of operator, they're kind of taking control of that themselves. And for each individual order, they're kind of selecting their own last mile provider, middle mile provider, warehouse provider, etc. Right? So for an average Meesho order that goes out now, kind of interact with and kind of contract out to four players in this entire network as well, right? And if you look at what Valmo's contribution to the orders that go via Meesho, that has gone up from say almost negligible in 2022 to almost 60% now, right? And effectively, the way it looks like is they want to have a bulk of their orders at least going via the Valmo network itself. So that is the route I think that they're kind of going to. And to get that, then they are now kind of branching out to new categories, right? So if you want to increase the volume of orders that you give these guys, two ways you can do that, right? One is, as Adarsh pointed out, right? You reach out to more of India's hinterlands, which is, say, regions in the northeast, regions in extremely rural sort of area, which is typically now not catered by most players. But if you are able to kind of get those people into your ambit as well, that gives you a natural driver for growth. The second is sell more categories to these existing players, right? So if you look at Meesho, say 2, 3 years back, they were primarily apparel and footwear, right? So apparel and footwear used to be 60 to 63% of their total kind of sales. And they've now kind of ventured into say home and kitchen, beauty, etc. Right? And say home and kitchen has gone from almost 10% of their total sales to almost 17, 18% of their sales, right? And this is a low AOV item. Home and kitchen is say a 160, 170 rupees order for average order value item. So they are kind of consciously going into lower AUV items to get their volumes up, right? And once they get the volumes up, they kind of get a very strong position on the Banco side of things in terms of negotiating with all of these partners and kind of getting the rates down. And that gives them, I think, a very strong advantage, right? Because if you can get your average order value down from, say, currently it's at 52, which is extremely low. But if they can get that down, say, even say 5-10% more, that allows them to kind of grow further into the hinterland and kind of reach out more customers, right? And plus, it becomes difficult for other parties to compete with them as well, right? So, just as a context for us, if you look at, say, the order value, the cost per delivery that, say, delivery, which is the largest kind of third party player in the country, for them, it used to be 68 in FY23. Meesho was at 66.1, right? And in FY25, Meesho is now at 59. Delivery is at 70. And in Q1, Meesho was down even further at, say, 52.5 or so. Delivery is still around 67 odd or so, right? So part of that will obviously be because delivery does some higher weight items, etc. as well. But in terms of the difference between Meesho versus the rest in terms of cost of delivery, I think they kind of crushed that extremely well. And incrementally, I think that just for the next 2 years, that could be a very strong driver which the business could go as such.
Is there so Valmo is another very interesting business, right? Because unlike Misho's, let's say, traditional business where you said they forego commissions, but they run ads and they make money from it. With Valmo, is there any sort of direct monetization or benefit that Meesho gets? Other than, of course, the second order effects of if it does delivery and logistics much more efficiently at a lower cost, its overall business grows. But other than that, what is the, if one were to think about, let's say, what is the the IP, or I mean, yes, I can imagine the part of the IP is the system that they've built in order, like for example, if Ganesh is saying that an average order goes through four people who are competing with each other, I'm sure it's valuable to be able to run and build and run a system that's able to coordinate that in real time across millions of orders every day. Granted. But is there any other?
No, but my point is that the second order effects of it is so powerful that you don't need to do anything else.
Yeah. So is that being run? So therefore, are you implying that Valmo will continue to be run on a no profit basis?
There is a revenue angle as well. So how it used to work, how it still works in the pre-Valmo and Valmo days is there is a rate card that your logistics service provider will give you. It could be delivery, it could be e-com express,
Yeah,
it could
these are your
be
third-party
Valmo,
3PLs
it
is
could
what
be
you call them.
e-cart, right? That is what they will charge Meesho. That is a outcome of the negotiation that Meesho has with, let's say, delivery.
So you'll use this to drive that down.
Hang on, right? So let's say that is X,
Yeah.
right? I've negotiated, I'm Meesho, your delivery, we've negotiated X, right? There is a rate, that is a rate card you give me as Meesho, as delivery to Meesho.
Right.
I give a different rate card to the seller, right? The seller pays me. Now that is typically X plus,
Correct.
right? So that is revenue for me, right? Now, so supposing, just making up numbers, supposing I agree with you $100, I charge the seller $150. $50 is revenue for me.
Got it.
Over and above my ad monetization.
Right. Correct.
Now with Valmo, what has happened is, and it's a great outcome, is first of all the actual cost that Valmo charges Meesho, it's internal. Valmo charges Meesho is less than what delivery used to charge Meesho, right? So there's a goodness that's come over there, the saving that's come over there.
Right.
So hence Meesho can pass on a slightly lower amount to the seller, right? The seller will pay Meesho that, so that is revenue for Meesho as well. And the seller sees lower cost of doing business. That is what Valmo has achieved, and that's what, for example, eCart has achieved for Flipkart. That's what has happened. Right? Ultimately, it's lower cost of doing business, and that benefit is that money that gets saved at every transaction level, and you're talking millions and millions of transactions every day. That is money in the value chain that ultimately typically goes either to the seller, right, or it goes to the consumer.
Got it. I'll just say 2 points about Valmo specifically because Valmo is really interesting. So Ganesh actually in his analysis, he had basically done this cohort analysis of sellers all the way from FY22. Ganesh, you want to talk about what happened to sellers as a result of Valmo because of the lower cost of delivery for the FY22 cohort?
Right. So we basically looked at seller cohorts from say FY22, 23, 24, and 25. And if you look at the kind of NMP increase that they get, right? So the FY22 cohort effectively took 3 years to triple their NMP on the platform, right? But if you look at the same numbers for the FY23 and FY24 cohort, they've effectively been able to triple their NMP in just the next year, right? So they are kind of growing extremely fast, the users on the platform. So the FY23 cohort has grown to say 3x in the next year and 4.8x. So they've grown almost 5x in 2 years. And similarly, the FY24 cohort has also grown, say 3.3x to the next year. Is that
my
right?
point being,
No. So sorry.
look at
Can we simplify that?
I'll simplify that. What it means
yeah.
is that, let's say, for instance, you are a seller who has joined Meesho in, say, FY22, right? You're selling merchandise worth, say, 100 rupees. I'm just taking 100 rupees as an example, the gross value, right? In FY22, it took you 3 years to get to 300, 3x of what you were selling, the total amount.
Right.
By FY24, you got there in just a year. So the same seller, so you're basically, it comes back to the point that we discussed earlier. The same seller is able to sell much more faster.
That can only happen for this value-conscious cohort of consumers that Meesho caters to. That can only happen if the cost of doing business can come down.
That is the only thing that
that's the
can
only
make
thing.
that happen. That's one. The second thing is that we talked about second order. So this is the first second order effect, which means that sellers on the platform are able to sell much more faster. The second thing is that, so we also spoke about the pin codes and all that. So as a result of, breaking up your entire logistics, what ends up happening is you are able to now service parts of the country which you can't service earlier. The last thing that comes to me is actually from the conversation that you had with Vidit in First Principles. And this is how he described Valmo. I don't know if we'll play this, but I'll just tell you what he says. From his perspective, how they discovered the opportunity of Valmo. And I'm quoting with it here. But the big difference, as you said, like Flipkart, Amazon built out logistics. They built out logistics for a very different reason than what we did it. Both of them sell a lot of categories to a lot of customers who care a lot about speed. They want stuff fast. So when you want stuff fast, you need a very different kind of logistics design to fulfill that. One of the big principles, if you want to deliver fast, keep a lot of inventory close to the customer, and that's why they'll have a lot of fulfillment warehouses, etc. But they did not optimize for speed, they optimized for cost. So they're like, our customers again are okay getting it in like a few days. So that allows us the ability to
Absolutely. So that's why Valmo is very asset light. There are virtually, I think there's very little assets in the Valmo value chain, and everybody just competes with each other, similar to sellers,
Yes.
to keep bringing price down. The other very cool thing, I think it's a hidden benefit, is that when you have your own supply chain and it gives you a lot of flexibility, and you can build for capacity utilization. Like the biggest bane of the supply chain, any supply chain, is underutilization, right? And when you have large warehouses and locked into people, assets, first mile, mid mile, last mile, etc., you typically have a lot of underutilization because every day business is not the same, right? It goes through spikes and drops. Valmo, you can optimize for utilization because it's under your control. And the other benefit is that because you're not working with a third party partner, you're not subject to his financial constraints. Right? Because what happens when you work with a partner, so the partner has his or her life of their own, right? They have their own financial challenges. 1 year it'll be, I want more business, so I'll give you a low rate card. The next year, if they want to obviously, make money, they'll pass that rate card on to you. So you're not so much in control. With your own supply chain, which is such a big part of the cost and the service element, you have a lot of those things under your control.
It feels like if you want to put a contra bet on the quick commerce story,
Correct.
it's really Meesho, right? Because quick commerce is premium consumers want everything quickly and are willing to pay increasingly some kind of fee for it.
And cannot be asset light.
And
Cannot
yes,
be asset light.
correct,
It's
right?
asset heavy.
And Meesho is like extremely value conscious. It's okay if it takes time, and we will just eke out efficiency after efficiency is not. So it's almost like a mirror opposite of the quick commerce.
Many Indias, right? Quick commerce is 50, the top, let's say 50 million households. This is like not even 50 to 200. This is 200 and below.
That's
right. Or you can say maybe 100 to 300. Right. So very, very different
interesting
consumers, very different markets where they live and everything different.
Who do you put your money on?
On me?
I will definitely put my money on you, but
Quick commerce or anti-quick
Well,
commerce?
Adarsh has been really persuasive. I'll definitely put my money on you. But go ahead. Where would you put your money on across all of these dimensions?
On what will lead Meesho to grow? Or what dimension do they
I mean,
need
like,
to...
okay, we are going back now to that same question, right? Like, as we peer into the future, next 2-3 years, if you were Meesho, if you were with it, which dimensions would you double down on? Ganesh said it's the Valmo dimension, which in turn leads back to automatically product dimension. Which dimension would you look at?
Yeah, so there are only two vectors to grow, right? One is you get more consumers, or the other thing, you get existing consumers to buy more.
Spend more, yeah.
Yeah, buy more. That is what it is, right?
I just want to say, spoken like a true e-commerce veteran. Okay,
but if that were true, then we wouldn't have seen the emergence of something like Valmo. Like, I mean, just to use a mind experiment, before Valmo was there, and if we were recording this podcast, and we said, what might Meesho do next? Using this...
See, Valmo helps them get both.
I get that. I'm just saying that I'm trying to bring in the possibility that could they pull out another Valmo out of the hat, which we didn't see coming. Like, where if you were to, like, I mean, now I'm increasingly viewing Meesho and Vidit as this, they are in this, they're channeling this flow. Their life force is a gigantic number of orders and transactions. That is their life force.
Yes.
And they will do everything to sustain that life force. And they channel it. And they channel it in different ways. Like, for example, they will channel it towards the Valmo side so that gets optimized. They will channel it towards ads, etc. and all that. So if transactions and an increasing number of transactions is the life force for Meesho, where else might they either dam it or channel it in order to extract more efficiency or growth? Because that will then maybe force us to also look at what other potential Valmos might be there.
Maybe you might arrive there using the heuristic that you're using. Either you have to increase the number of customers or you have to increase the value from there.
Yeah.
You can start there as well, but maybe
Yeah.
you'll end up in a...
I think more customers will happen organically, right? And like if I were to if I was sitting in that chair and deciding where to put money, to go after more customers, I think it'll be very expensive. And anyway, there is an organic shift. There is virality that comes in. If so many people are using you, you'll get that, right? I think that is that NN, which is new, should not be where the money goes. Where the money should go is to get the existing guys to buy more, right? Because they already have your app, they like you, they shop on you 8 times a year. How do you make that
They're
8
loyal.
times? They're
You're
loyal.
saying
There is
that
loyalty.
Your data science is very good at
Yeah, you can
selling more to
predict.
them. 3 out of 4 orders based on recommendations.
Super, right? Now the difficulty there will be the
size of the wallet,
yeah,
right?
because
the wallet size is
no, not really. See, these customers are used to shopping offline still. So I think the new customer dimension, I would say that let that happen organically. It'll be too expensive. Certainly, the dimension of getting them to buy more is what should be dialed up. Now, the challenge there will be these customers still shop offline, and they have put down price challenges, right? So the average
that mean?
as in how much money can they put down per transaction?
Got it.
So they prefer to buy, and this is shopping behavior across this cohort. They prefer to go offline, buy small things very frequently. And per transaction, they don't put down more than 20-30 bucks, right? And what they buy is a lot of general merchandise, lot of home, very low ticket size. Now, if Meesho wants to start obviously selling those categories as well, which are low ticket size, sub
Can you
50
give us some
rupees.
examples?
So think of lipsticks, think of nail polishes for like 40 rupees. Like think of hair clips for like 40 rupees. Like think of beauty and fancy shops, right? Think of home products for 50 rupees, kitchen product, cutlets, all that stuff, right? So I think the next dimension of growth certainly has to come from lower ticket size categories. That is very, very difficult to do. So the next business model disruption, which I think they would be thinking about, would be how do you get a business model that can go to existing homes but sell them lower ticket size products? Because that is when the transactions will really spike.
That's hard.
Yeah.
How do you
Yeah, I
do
think
that?
Valmo will enable some of it.
Sure.
Because it's sucking cost out of the value chain and putting that back into the price. Clearly, regional supply is the other way. Ultimately, I think it has to come out of lower cost of doing business. Just like 2-3 years back, there was barely any non-fashion business on Meesho, right? But the point that Ganesh also made that now non-fashion, which is way lower ticket size, is now a very big part of their business. Means they have been able to do something to get the cost out and enable those categories. I think there is one more, next wave of cost disruption that will enable lower ticket size products.
So here's my prediction. I mean, we spoke about dimensions, but here is mine. I think instead of the only way now, you're right, it's now a cost. You have to just cut cost in some way, right? It's just a cost sucking thing. I think one of the things that enables you to cut cost, at least on a variable basis, is if you go down to the manufacturing side, right? That's now the next step. Like what's stopping Meesho from going, and it's completely contrary to their asset light thing, which is both on the seller side and on the logistics side. But what's stopping them from going to Tirupur and buying off a couple of these,
No, but think about it, right? Like, I mean, is the logic there that they will be much more cost efficient at manufacturing t-shirts than people who've been doing it forever? The only delta there is the profit margin that somebody
Yeah.
else is attaching to you, right?
That's what I'm saying.
But are you really willing to put down capital costs of setting up a factory, hiring people to run those factories in order to capture that delta cost of margin? This thing, it doesn't make sense.
And
right?
how many
Because-
categories will you do it for?
Yeah.
Like you can do it for t-shirts maybe, and there also I agree, it's the DNA is just so different, but you can't do it for 200 categories. You can't do it for 100 categories. Right? So I think there are certainly these
Yeah,
challenges
even in one
as
category,
you go
imagine
forward.
let's say
Even in one
t-shirts.
category, yeah.
Let's say you say I'm going to go and set up a t-shirt factory. Imagine how many years it will take you to make the same mistakes and learn from the same inefficiencies that those people have already figured and sorted out.
Yeah.
So you're still operating less efficiently than them for at least 3-4 years.
and
There's
that
no way.
and that capex is sitting on your balance
Right,
sheet.
that capex is sitting on
Well,
your
after
balance
you've
sheet.
gone public. So
and,
yeah, good luck.
and now you're in the anti-Meesho situation of of I've got this factory, I've got these t-shirts, I got to sell these t-shirts because I made them and they're sitting on my right. That's not their essence at all. I doubt, like, I mean, in fact, if they do that, that would be the time when you see their culture is broken. Right?
True that.
Right?
Yeah, yeah. Very, very anti what they should be doing.
Okay,
certainly.
fine. All right.
Yeah, I mean, just to add to Rohin's point in terms of, say, businesses that were of, say, Valmo scale a few years back, I think one thing that Meesho is currently focusing on is content commerce, right? Which is kind of creators on their platform, kind of
Thank you.
selling products and kind of selling that, right? And that's currently a very small part of their total book. So to just say 700 crores odd in FY25, right? Which is just, say, 2% of their total NMV. But I think that could be one thing because in, say, countries like China, etc., that seems to have worked quite well. So that could be one thing that they say focus a lot on, which is very, very nascent. So Valmo, like 2 years back, was just 2% of their total orders, right? So I think content commerce is at a similar scale right now. I'd say just 2% to 3% of their NMV or so. But could be something that's interesting.
Think about it, PGK.
I'm very skeptical about content commerce.
Okay.
No, okay, fine.
No.
I agree that
think
buying a
about it
t-shirt
from
company
the
is a bad
same-
idea, but okay.
From the
yeah.
same flow or like, logic that we discussed earlier, that Meesho's game is to generate significant flow and figure out how to channel it and monetize it. Now, let's approach it completely different. You're someone else who says, hey, which companies in India reach an audience of 250, 300 million households, right? And what can I, show them? What can I, I mean, right now they're in the selling business. You can absolutely imagine now again the question of who will generate the content? What does it cost to, distribute that digital content? I think that those are solvable problems, right? I mean, if Amazon can leverage and bootstrap Prime to turn it into which is actually a much more premium service, why would it be so hard for Meesho to,
No, the reason why it's so hard is because it's a completely different thing. It's nothing to do with commerce. What you're fundamentally
No,
doing
but
is...
they've done it. They've actually, during their reseller era, during their social commerce era and all that, they actually, I mean, in fact, even earlier this year when I spoke to Vidit, he seemed quite excited by it. Genuine, like,
I get
obviously he didn't reveal his cards or anything, but he seemed excited by it.
Got it. I'll ask others to jump in because I know Flipkart has tried a bit of content commerce. I'm just very skeptical about content
That
commerce.
list is a long list of the things
No, but I'm
Flipkart
just
has
saying,
tried.
no, it's not just
offense.
Flipkart. I don't mean specifically about Flipkart, but I'm saying that this content commerce thing is something that nobody has ever cracked it in India. I'll give another example. Let's take another example of, let's say, if you look at, say, Glance.
No, but why does it have to be content commerce? Why can it not just be content? Think about it. You have reach or distribution into these 250, 300 million households.
So you're going to compete with Instagram and YouTube. That is...
No, but my question is, okay, so by that logic, we could also say, are you going to compete with Amazon and Flipkart in order to reach and sell to this? They did. They figured out ways. We could have said, are you going to compete with delivery and do it better than them? Well, they did. Now you're saying, are you going to compete? Well,
actually, maybe, because now I'm thinking about it. I'm saying that imagine a zero commission model applied to content creation where YouTube and Instagram, whatever, pay you some and take some cut.
Approach it from a different way of loyalty. I mean, or engagement. If you already have these people coming to your app and you have the option to show them something as well. I'm not like,
No, I get it. This is very close to the Glance and Raposo playbook, which I don't think has exactly taken off in India in such a big way. But okay, I'll let you jump in case you have something to say.
See, the everything, that Meesho has done that's worked well for them has actually enabled commerce. At the end of the day, it is buying and selling, right? There are people listing products and there are people buying products. And that is a flywheel that they know very well. And that's a flywheel that they've scaled so fast and all of that.
So thus you are leaning towards a content into commerce play, the China-like play, where people are doing live streams
he didn't say
and
that.
selling.
Ganesh said content
said
commerce.
it. And
Because he seems to be disagreeing with the pure content.
Yeah, I think it's just
approach.
it's like a different company altogether.
Yes,
right.
I
It's
agree.
not, and it's not a different company starting from zero. It's a different company that has to start at zero and tomorrow go to 250 million households. Right, very difficult to do. Right, that DNA, that capability, everything. It's effectively two different companies. I don't think that'll work. I think content commerce in India has not worked at all. Right, has not worked at all. Is still got serious
Why
challenges.
though? Why though? We know it hasn't worked, but why though?
At the end of the day, I think anything to do with commerce that doesn't work in India is because the customer value prop is not clear, right?
But that's exactly what Meesho is good at.
Yes, either you've not nailed in what needs to be sold or the story of how it needs to be sold. It ultimately boils down to that. Like, I'm not an expert on content commerce, but I think the way what sells there and how it sells there and at what price it sells there, I think something in that equation is not working. That is the reason why it hasn't really scaled to, even for Meesho, by the way, right? And they've been
Right.
at it.
Yes,
They've
exactly.
been
I
at it
agree
for some
with
time. And by the way, they have a fair amount of organizational memory on it as well.
Right.
It's wasn't brand new for them. It hasn't really gone anywhere.
Got
right?
it.
So I think the core e-commerce playbooks that they have and the knowledge ability they have to keep taking cost out of the ecosystem and putting that that saving back into, that is where I do think that is a dimension that they have to
See,
keep
my
playing
argument
up.
originally, which I'm walking back on that, the manufacturing part of it is because for me, looking at it right now, that's the only place where cost is left to take out.
We don't know. So there is a massive hidden cost in
Acquisition.
in doing a business that has I think the number for them would be about 3/4, 75% cash on delivery. Right?
Yes.
That is
Ganesh wrote about, come to that. Yes, come on, please continue.
right. So I think that's a very big cost, by the way, right? Because when you have high COD, first of all, just the cost of the transaction is higher, right? Because people are carrying cash and what you get charged as a platform is much more. Secondly, the customer who has high COD has no skin in the game, so they return. Right? So the RTOs, which is before customer has opened the product.
Yeah, return
it's
to
just
origin.
a product that has left the origin. It's just like gone for a nice sort of round
Scenic route.
scenic
It's
route
taken the
around
scenic
India,
route back
and it's
to
come
the
back to the
warehouse.
guy, right? And that there is a fair amount of time it takes, and it comes in a condition that's not great. So
And that
there's
is
a lot
inventory
of,
that is not in your warehouse. So that is inventory that's outside as well.
that's right. That's right. Because the customer has not touched it. Customers ordered it,
Correct.
and saying I'll pay for it when it comes.
Correct.
And
So
because
not only are
anyway,
you paying for it as Meesho, but there's an opportunity cost of losing that inventory.
100%. And by the time it reaches back to the
Correct.
to the origin, it's not even in its best possible sort of shape, etc., etc. So I think there's a big cost that gets added on because of such a high COD percentage, right? And Meesho has a very high, used to have, I'm sure still has, a very high COD percentage. So maybe the disruption that they need to look for is how do they manage to bring down that COD percentage, especially now that there is customer loyalty, right? Why do customers buy on COD? Because they don't trust the platform, right? They don't trust that the goods will land up in the same form as I bought it. Now, if you have 8 whatever
Are
transaction,
you thinking like UPI /
No,
fintech?
I'm thinking services. It's a subscription.
finance, yeah. So I was, as we were talking, just thinking. So why not something around subscriptions?
Yeah.
Why not something around financial services? Anything to bring this COD percentage down. Like quick commerce, for example, has virtually no COD. And why is that? Obviously, the customer profile is different, and everybody has UPI. By the way, so do these customers have UPI. But people are like, yeah, I just trust Blinkit, right? I just trust whoever, right? And it comes to me in 10 minutes. So there is a trust on the platform, and there's a reduced speed of delivery. In Meesho, reduced speed of delivery is not going to happen. It will take time, right? But now people trust the platform. Why would you not like take a knife and run through that COD behavior and disrupt that?
Ganesh, can you just shed some light on COD? Because I think you wrote about this.
Yeah. So broadly, the way they kind of report their numbers, right, is they have the number of placed orders, then they have the number of shipped orders, which is orders that are kind of cancelled midway, and then they have the RTO, right, that is kind of rejected at the doorstep itself. So that number in say 23, the successful orders to the placed orders ratio was at say 66.8% or so. That has improved to almost 71.1%, right? So there's a good amount of improvement there. And that is across both, right? So the cancellation rates have come down from say 15% to 13.5% or so, and the RTO rates have come down from 21.2 to 17.8.
That's lot. But it's still a lot.
It's a lot.
Yeah. So
Still a lot.
I'm just saying that I used to be in e-commerce long ago, like a lifetime ago, 15 years. At that time, if it was like 21%, I mean, there would be a fire like on this thing. Of course, customer profile different, value different, etc. But 21%
It is a
lot.
very stubborn metric to move, in all honesty.
Correct.
It is a stubborn metric because it's so deep rooted in the customer buying behavior.
Correct.
That if I don't touch and feel, if I don't know you, somebody else says something bad about you, I will not prepay.
Correct.
Right? And now it's not even lack of instrument, right? Now everybody has UPI.
Exactly.
So
It's not even lack of, it's not even lack of like pin codes, addressability. All of those things have improved.
No, there will be a little bit of that, but that's not the core reason, right?
Correct.
The core reason is still, I want to see the product in my hand before I sort of prepay. And if I don't prepay, I have no skin in the game. That's the thing, right? And there is 1 week, 2 weeks, 3 weeks, whatever the SLA times are, I might change my mind. Correct. I might just walk to the store next door and pick it up. Correct. So many reasons happen why RTO happens. That's a crazy hidden cost. And that the only way to solve for that hidden cost, there are only 2-3 ways at the end of it, right? One is you deliver quickly. Correct. Like quick commerce, you can't do that if you're Meesho.
Correct.
Second is you don't have COD.
Right? You don't offer it.
You reduce COD. Like you reduce the number of COD orders. You get customers to prepay. Because the third thing, which is platform trust, they have that, right? People trust Meesho, the 200 million people or 250, whatever number, who are ordering 8 times. Now just think of it, if 210, that's the number that Ganesh said, right? 210 million people are ordering on an average 8 times a year. That 8 is the average. There'll be a lot of people within that who are at 15.
Correct.
There'll be a lot of people who are who are at 4.
Correct.
The people who are at 15 are buying on you virtually every fortnight. They trust you. There is no reason for them to be doing COD
orders.
So that, I think, is the next big disruption. Likely.
Adarsh's points and Ganesh's points about the ruthless efficiency around costs that Meesho has adopted as a way to deliver and transfer more value back to customers and suppliers just reminds me of Walmart. Right? Because and for the longest time we keep thinking, like, for example, just recently this week we were hearing Zepto, Adit Palicha saying that we want to be the DMart, everyday low prices. I think this thing of everyday low prices and focus on cutting costs gets thrown about a lot. I think if you just look at Meesho and what they did with the zero commission model and Valmo, and not just that, doing that to increase your bottom line, but to transfer that back into the ecosystem, which in turn, expands the size of the ecosystem and drives prices, right? That is truly Walmart's differentiator, right? Everyday low prices as a way to keep efficiency very high and to keep customer trust very high so that people keep coming back, etc. And it's rare where you sort of see that, because you can't just naturally take, when you look at Walmart and you say Walmart did this, but they did it with an offline business, right? Correct. How do you do it with an online business? Because you'd approach it completely differently from first principles. Yeah. So you sort of see how Meesho is doing that with its online business. And just to kind of close the circle on, and Vedit seems to be a fairly big believer in a long-term strategy, right? Where he does say that we are trying to make decisions that will be sustainable over the long run. And, I think one of the people that he spoke about was Mahatma Gandhi, ability to create change, etc. So if you take efficiency and this ruthless taking a knife to efficiencies, along with this constant paranoia of keep your ears close to the customer and the ground and always be ahead of that and take a long-term approach, I think that's what maybe for me the culture element was, right? So
and use data and tech. I
think
the
data science. That's absolutely
it's underappreciated, I feel.
Correct,
genuinely.
Correct, right?
Use data and tech to really power every part of how the business operates.
Thank you so much, Ganesh, Adarsh, Rohin. I think this is the longest and the only podcast, I think, in the last few months that we have spoken about without using the words AI anywhere. Okay. So, yeah.
Wait, could that be Meesho's hidden strategy?
No. We are out.
Meesho.ai.
It's done. It's over. All right. Thank you so much, guys. This has been such a wonderful discussion. I really, really appreciate it.
Thank you, Ganesh.
Thank you, Ganesh. Thank you.
Thanks, guys. Thank you.
Thank you for listening to this episode of 2x2. This episode was mixed by a resident sound engineer, Rajiv CN. If you feel there's something we've missed out in this discussion, or you feel some numbers or facts don't add up, you can write to us with your thoughts at 2by2@theken.com. And if you're listening to this episode on Apple Podcasts, please show us some love for the podcast by leaving us a rating. Lastly, if you loved the episode, share it with people, friends, family members, colleagues who you feel might find it insightful as well. We'll be back next week with another exciting discussion and 2x2 for you to think about.